Ethena just snapped a 7-month downtrend. Price ripped through 30 cents and eyeballs are finally turning toward the quiet giant that's cornered 81% of its entire sector with barely 30 rivals. While most traders are still arguing about the next meme coin, ENA has quietly stacked BlackRock partnerships, $50 million liquidity boosts, and fresh Coinbase hedging rails. 5 clear profit ladders now stare us in the face. First at 48 cents, final at $1.97. Miss the breakout, and you'll be watching screenshots instead of balances. Stick around. In the next few minutes, we'll unpack every catalyst, chart level, and the exact plan I'm using, plus how you can copy it in 2 clicks. Let's dive in. Remember yesterday's block diversity post showing ENA storming into its second range? That green bar was the first public whisper that something had changed. 24 hours later, Lucky's chart called it a new wave, but the market still snoozed under 32 cents. Today's candle finished the sentence, plus 20%, fresh weekly high, descending trendline shattered. Back up a step. Ethena isn't another copy-paste stablecoin gambit. It's the synthetic dollar engine printing real fees from perp funding. The protocol's USDe exploded to the top of DeFi revenue charts in Q1, and that foundation makes the ENA token more than line art speculation. It's a direct bet on the cash printer underneath. Catalyst number 1 lands in Connor Ryder's sector share tweet. While lending, decentralized exchanges and CDPs fight over single-digit scraps, synthetic dollars already move billions, and Ethena grips 4/5 of that pie. Big funds want those yields. Retail wants the point-and-click interface. Catalyst number 2. Ethena's splash banner with BlackRock BUIDL and Securitize. Global asset manager, compliant wrapper, always on swaps. Translate that to plain English and you get more doors open, bigger money flows. Put the 2 tweets together, and you see why smart money started front-running today's breakout before Twitter caught up. Now let's shift to my weekly chart. Since New Year's, ENA's price respected that sloping yellow ceiling. Every rally lost steam exactly there. This week the candle cut straight through on above-average volume. A break of structure on the weekly carries weight. The next resistance often lives at the 236 Fibonacci, 48 cents in our case. The Heikin-Ashi RSI indicator below is curling up from oversold while histogram bars are flipping green. Early confirmation that momentum is flipping positive. Meanwhile, the VRVP shows a fat volume gap between 32 and 35 cents, then from 42 to 80 cents. And you know what? Gaps fill fast. Block diversity's second-range midpoint wasn't just a meme. That zone coincides with the top of May's high-volume node. Today's blast walked straight through the first volume node, meaning sellers got soaked up quickly. Liquidity is now lighter all the way to the dashed gray at 37 cents, then later from 41 cents to our first take-profit zone at 48 cents. Sell into strength when order books thin. Picture the trade like a staircase we're climbing together. The first step sits at 48 cents, right where the 236 Fibonacci lives. As soon as price taps that line, I cash out 1/5 of my stack. Just enough to pay myself and tighten my nerves. If momentum keeps jogging upward, the next landing appears at 64 cents. That's the 382 fib and the top of an old volume shelf. Another 20% comes off the table there. Now my original risk is mostly covered, and I can trail the stop to break even without breaking a sweat. Step 3 is 89 cents, the golden 618 ratio. Here I peel off 15%. By this point the trade is running on house chips. Even a total reversal can't hurt me. Step 4 is the psychological mile marker, $1.30. That's the full retrace from last December highs. Another 15% goes into the vault, and my stop scoots higher again. And then there's the penthouse, $1.97. The 1618 Fibonacci extension. Whatever 10% remains, I let it ride into blue sky. If we get that far, the market's telling a story I don't want to interrupt. Notice the rhythm. Reward first, ego second. Each trim funds the next hold. Each ratcheted stop locks in freedom. Miss a level and I'm still green. Hit them all, and the compounded return easily clears 6-1. That's the ladder. Simple, mechanical, emotion-proof. Risk isn't optional. That red dash stop line exists because weekly closes drive longer-term structure. Dip wicks under 25 cents won't shake me. A full candle under 21 cents sends me flat. Trailing stops move up every time a profit target fills. Capital preservation first, moonshots second. Now let's flip back to Ethena's own updates. $50 million July capacity on Pendle and Aave, plus September slots already greenlit. More PTs equals higher demand for USD yields, which loops back into ENA by pressure via protocol fees. Spark Ignition airdrop eligibility for wallets holding more than $5,000 back in March. Retroactive rewards spur users to hold bigger balances next time. Another demand loop. Now, a tweet from July 10th drops the bombshell. Ethena hedging flows now tap Coinbase International Exchange via Kappa's ClearLoop settlement. But why should we care? Institutions can hedge off exchange, slash counterparty risk, and scale positions without clogging spot books. Liquidity deepens. Coinbase, via Copper ClearLoop, will settle mark-to-market with Copper every hour, 365 days a year. This upgrade didn't make retail headlines, but it's the plumbing that convinces funds to size up. Put simply, Ethena just got a bigger pipe and thicker walls. Market cap still sits under many layer 2s. Yet Ethena already throws real revenue, owns its niche, and now enjoys BlackRock optics. Combine that with a fresh technical breakout and a stack of fundamental tailwinds, and probability leans toward price discovery rather than exhaustion. Early doesn't mean reckless. Follow the ladder, respect the stop, and remember that even perfect setups fail 1/3 of the time. I have opened this trade at 33 cents 4 weeks ago. Then at 26 cents I bought more, giving me an average price of 29 cents. No gut feelings, just structure, volume, and catalysts. If level 1 fills, I trail to entry. If level 2 fills, stop moves to 32 cents. By level 3, original risk is already banked, and the rest becomes house money. That's the difference between gambling and compounding. You pay yourself along the way. If today's breakout fired you up, but you're still sitting on the sidelines, action beats observation. And where you act matters. MEXC, the exchange I'm most using, lists ENA with deep liquidity and the lowest fees in the industry. New accounts using my referral link in the pinned comment below /trading costs by 20% for life and unlock a starter pack worth as much as $8,000. The headline perk? A 2-day 600% APR staking slot on 300 USDT. Roughly $10 in yield for clicking 2 buttons. Add fee vouchers, futures credits, and daily pop-up rewards, and you've basically funded your first trim on ENA before the trade even begins. Deposit once, flip the same USDT to meet volume, and the bonus is yours. I choose MEXC because tight spreads and surprise airdrops mean more profit margin and more upside lottery tickets. Exactly what a disciplined ladder strategy loves. That's the full picture. Breakout confirmed, catalyst stacked, risk defined. If the plan helps you, destroy the like button so the algorithm pump your bags and shares the wealth. Drop your first profit target in the comments, and subscribe for real-time chart breakdowns every day. Want more Ethena depth? Tap the videos now sliding onto your screen. Stay curious, stay kind, and above all, keep turning data into dollars. See you tomorrow in the next one, Yield Pro family.